Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm your Daria. We have with us Kunal, Shah, Head Commodities Research, joining in. Kunal, a very good evening. My first question again that comes to you is with regards to what's happening with crude. You had the EIA report that did come in as well, especially with regards to where the inventory data goes. The US inventories have risen. Now, what is the implication of it? Because we've again slid below that $41 per barrel mark, which was the recent high.
Yeah. So first of all, before you start with the US crude oil inventory, I would like to tell you what has changed overnight for the commodity market. Number one thing is yesterday FOMC minutes were released and there was a forecast. So FOMC had come up with a forecast that the US economy is going to contract by minus 7%. So that number is pretty scary for economies like US. Number two, there are cases of coronavirus which is rising in some of the cities of US such as Florida, Texas, California. So these two are the major news right now. The Federal Reserve is very dovish. They are going to keep the interest rate low for next 2 years, 1.5 years. That is what they are indicating. They are willing to even pump more money if market worsens. So that is basically showing that the problem is much bigger than everyone is anticipating. So US is a 20 to 23 trillion dollar economy, and that economy is going to contract by 7%. That is a big number. That is very scary number. So my sense is that first of all, from oil point of view, back to your question, the demand side doesn't look very rosy. So now if the coronavirus cases again starts coming in, then I don't think so the demand of oil is going to remain robust. Okay, so you are going to see crude oil demand to remain subdued going forward. Number one. Number two, uh, Libya production has started. It is just the liquidity which is basically driving the Chinese demand and the liquidity which is driving oil prices. So I don't know either of these two factors are going to remain constant. The answer is no. So my sense is one can go short in crude oil MCX at 29.30, 29.40, keep a very strict stop loss of 3,000 and expect oil prices to dip to the level of 2850, 2820. So I'm expecting after a great run up in crude oil prices, we are going to see some correction, profit taking, whatever you want to term it. And I think the trend for evening session and for 1 or 2 days is slightly lower, is what I'm expecting.
Right. So overall, what is the strategy that you would want to recommend in terms of crude?
Like I said, I would like to go short at 2930. Even at somebody wants to go short at current market price, they can put a strict stop loss of 3,000. And if somebody doesn't keep a long stop loss, I think they can keep a stop loss of 2960, 2965 and expect prices to dip to the level of 2850 and 2810.
Right. And with this, what's the sense that you're picking up, Kunal, especially in terms of where gold goes? Again, if you go to see, there was an uptrend that we saw in terms of gold prices. In fact, a lot of reports which are coming out that there could be fresh all-time highs that could be hit in terms of gold. What would your recommendation be and what's your view?
Yeah, so for gold, my outlook is like I said, short term. I was not expecting it to go up, but yesterday's forecast, GDP forecast of US has triggered short covering. Number one, because the CFTC position was showing a lot of fresh short buildup during last week, so that has been covered. And number two, I think the dollar index remain key to the gold right now. The dollar index is trading at 96, and I think if today evening it goes down by 95, 70, 90, so it breaks 96 and it goes below it, I think gold can go up. So my view is that for evening session, so on the level wise, on COMEX, I'm expecting 1750 to be the hurdle. And right now, if you go long, you can expect gold prices to test levels of 37,650 to 47,700. So if you buy gold at 47,300, you will see gold at 47,700. Even right now it's trading around 150. You can go long right now also. So I'm expecting during evening session some bit of follow up buying to come in, but I'm not expecting it to shoot up to $1,800 immediately. So maximum 1750 on India, that should translate on MCX. It should translate to 47,700. Not above that.
Right. And Kunal, with regards to base metals as well, let's look at copper first. Now, overall, if you go to see, the pickup with regards to where China is concerned is happening faster and stronger than what everyone had actually expected. Now, historically as well, if you go to see in terms of China's credit pulse, that's been the single leading indicator that everyone has looked at with regards to where the upturn in copper consumption goes. What is the sense you pick up? Do you think this is then the time to look at copper?
Yeah. So, as far as copper consumption is concerned, China's demand is improved. China's inventory on Shanghai has been on a constant decline. So, we've seen a 40% drop in Shanghai inventories from last 2 months. So, most of the people who are physical users, they are buying, they are taking deliveries from Shanghai Exchange. So, I think the trend was definitely bullish, but I think 450 we can see some correction. I'm not bearish, but some correction at these levels. So I recommend to go short today around 446, 447, put a stop loss of 450 and expect prices to drop in test levels of 441 to 440. So this is just the trading view I'm giving for evening or perhaps can extend to tomorrow. So I'm not having buy calls on industrial commodities for today and tomorrow. And I think gold can deliver some upside, but don't expect gold to immediately test $1,800. The reason for that is the central bank buying is very much muted. So last year we had seen central bank buying 700 tons of gold. So this year around, I'm not expecting that demand to even cross 300, 350 tons. So drop in central bank demand because all the countries are trying to protect their country from the COVID-19 crisis. So a lot of central banks have chucked their buying in gold. And apart from that, another reason, the retail demand India China remain very weak. So it is all ETF demand which is driving gold right now. ETF holdings are up continuously for last 30 days. So last week we saw 2 days of drawdown, but net there has been constant inflow. So gold can move up. Don't be very bullish in this kind of scenario. Be very selective about the stop losses. Trade with the strict stop loss. So if you are going long in gold, 47,150 to 200, if you go long, stop loss should be placed at 46,900 for evening session, and I think it can go up. So broader view is gold bullish for short term, but not very bullish. Number two, metals can correct. Copper can correct to 440, nickel can correct to 955 to 958, and maximum, aluminum can also give some correction after the way it has risen 132, 132.50, but not very bearish.
Hmm. Right. And anything on the agri commodity side, Kunal, that you can look at? Because in between, you were even positive with regards to where cotton goes. So your view on cotton, and apart from cotton, anything on the agri commodity front?
I think it all depends on the progress of the monsoon, how the monsoon goes. But I am expecting, going forward, the oilseed, especially the soya bean, to remain under pressure because this year also the sowing is expected to be robust in India, and I'm expecting that there will be a soybean prices on soybean. So August contract, 3,800, 3,850, good levels to go short, and on downside you can see soybean going down and testing levels of 3,700.
Right. So that's with regards to where agri commodities are concerned. If anyone has any questions, Kunal is here to answer. So you can start putting out your questions right away to Kunal, and he will be replying to you right now itself. We'll just wait for a couple of seconds to understand, I mean, to see if there are any more questions pouring in. But Kunal, till that time, I was just reading where the National Commodity and Derivative Exchange is actually looking to publish two national level rainfall based indices. And I think this was done yesterday. And they said that they would be tracking the systematic rainfall movement in the country. That's the Indian Monsoon Index and the Indian Rain Index. Anything that you have on that front? It seemed really interesting.
Yeah, it is interesting. I had a talk with the NCDX officials also. It is very interesting, and we are going to conduct the session when they are planning to start it. But somehow, the investors are still not returning back to the agriculture commodity after the kind of fiasco we had last year. But slowly and gradually, the volumes are picking up right now, and after monsoon, I think it will pick up further. So we will keep one webinar for that. And now for all the viewers, who have joined here, so we are all are doing this exercise of doing currency and commodity webinar. Basically, it is for you. So I still the participation is very low from all the regions. I'm still surprised that the number of users are very less. So let us make a effort that everyone is most of the people are working from home. So make the most of this kind of opportunity, and please tell all your fellow colleagues to join these webinars, not just mine or whatever webinars are done by our team. At least try to join all of them, and we are still getting very poor participation. So the management is concerned about that. We are doing this exercise and only uh, participation rate is very low. So this is not justified. So more and more people from all these regions should join. So that is my request to all the panelists.
Right. Kunal, there's a question coming in with regards to natural gas. What's your view?
No, I'm like I said, I'm bearish on the commodity, and I'm not expecting any major up move in this commodities upside. See, natural gas, the peak season, that is the winter. In that also, the demand remained very poor because of the hot weather. So the inventory and the production of natural gas is continuously rising. So I'm expecting natural gas prices 137 good levels to go short, 140.41 stop loss, and expect it to go down and test levels of 130 to 129.
Right. So that's the word coming in with regards to natural gas. I think Kunal, there are no more questions that are coming in. So thank you so much for joining in. And yeah, as Kunal also requested, we would actually request everyone across to participate and get your strategies that you could be giving out to all your clients as well. But thank you so much for whoever has joined in today. Thank you for the participation. Thank you.